We have three messages today. We're going to talk about August performance, market volatility, and the Bank of England. August performance was solid. A typical client balance portfolio was up 1.7% on the month. And that compares to the MSCI World at 0.8%. So it was a good month. It was a risk-on month. Gilts and credit were up. Equities were up. We saw a rotation into value stocks and into small cap stocks. Moreover, UK equities outperformed world equities, and sterling had a small bounce from very low levels. So those portfolio strategies that were tilted towards the UK outperformed in August, which is the reverse of what we saw in July, where overseas components did quite well. So we've had a very solid July and August. We can't rest on our laurels. It's now mid-September and the market has woken up from its summer lull. This brings us nicely around to the recent bout of volatility that we have seen in markets. In August, volatility was unusually low. Now, the thing that we know about volatility is that it doesn't tend to stay at extremely low levels or extremely high levels for a sustained period of time. This is a characteristic that we call mean reversion. We are looking at ways to exploit increased volatility phases going into the end of the year. And what we are looking at in particular is sold volatility products that we can implement into portfolios. We don't like buying volatility. It is very expensive. It can cost as much as 20% per month. But we like selling volatility because that cost accrues to us. In September, the Bank of England kept rates on hold at 0.25 percentage point, as expected. After the August stimulus package, they want to see how things pan out in the economy. Moreover, Brexit hasn't happened. We don't know what form it will take. And while that uncertainty prevails, it's going to be very difficult for sterling to rally appreciably. On a long-term view, strategically, the UK economy is robust enough to maneuver through this uncertainty. Sterling is cheap on a multi-decade view. And in portfolios, we are locking in foreign currency gains and we are deploying those back into sterling assets.